Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is Tuesday, January 28th, around 7 minutes till 9 a.m. Eastern Time. So, looking at today, we had durable goods coming in a little bit weak this morning, and then really not a lot of news the rest of the day. Tomorrow's obviously the big day with the FOMC, although we expect nothing to happen as far as rates, but it's going to be all the jawboning, all the questions, all the the standard BS. But after the bell tomorrow, things start hitting the fans, and it'll be the conference calls, right? And all these conference calls will just be about DeepSeek. You got Meta, Microsoft, Tesla, uh, and then Thursday before the bell, you got UPS, which is a just consumer sentiment read, and then you've got Thursday after the bell, you got Apple. So, and of course, you got some chips there with Intel uh, Thursday after the bell as well. So, not a lot going on today. It'll all be tomorrow. As we look at, where we're at right now in positioning, 6,000 obviously is just going to be a big psychological level. We closed at 6,012 yesterday. Futures are up around 6, so it makes around 6,018 if cash markets were to open right now. Um, so you can see again, 6,000 is going to be your bogey, and then it's just basically 60-30 to the upside, and then 60-50 to the downside. You're looking at 75, then 60, then 50. Looking at the SPY, right now we're trading 610 cents. So, 600 is going to be a marker, and then you can see it's pretty easily to slide down another 50 handles or $5 in this 50 ES handles to 595, and it'd be just as easy to get up to 60-50. So basically, what I'm saying is standard range right now would be plus or minus 50 points on the ES right now, and you could go, up 50 and then down 100. You could go down 50 and up 100. That is definitely on the table. And your bogey for the market today is basically down to 590. That should be your absolute floor. And on any, real uh, push to the upside, you're looking at 613 to the upside. Looking at the Qs, it's a little bit easier to read, right? We're currently trading 515 and 14 cents. You could slide up to 520, which would be up 200 points for the NQ, or down to 510, which would be down 200 points. And again, just like the ES, you could go down, 200, then up 400, or up 200, then down 400. That is definitely on the table today. Uh, Looking at yesterday's close, we were right at 515, which is right where we are right now. We were right at 600 on the SPY, which is right where we are right now. So basically unchanged in the overnight. If we look at what happened yesterday's session and look at structure, you can see we got some single prints on the Dow. We have a split at 44,734, and then we have salmon run trades that went off after the bell in the Dow and the ES. So there's your potential capitulation to the upside from yesterday. We'll see. That's your marker. For the ES, you've got a lot of poor structure to the upside that you could get into. All these levels are all marked on the chart, and you should think of them as potential support resistance ranges until proven otherwise. And then as we look at the other indexes, there's really no poor structure whatsoever. So looking at, right now, again, we're trading 60.55 basically. Uh, so this is just yesterday's range. So we're just a smidgen. Uh, you're right at the high end of yesterday's range. If we look at one time framing, again, we're right at this 300 and 311 basically is that's the bottom of the FOMC bar from the last FOMC meeting. Remember, tomorrow is the next FOMC meeting, so it's either acceptance back in this range, or we start potentially pushing below for the Nasdaq. The ES is firmly inside of this range. And again, you have potential resistance up at 60, 68, plus all those other positioning, you know, notes that I made for you. You got 41 points in the overnight session, just sitting here, right at yesterday's high. Notice that all the inventory from the overnight session is basically above value area high in the overnight session, and right at this first marker to the upside that is at 60.72 to 60.73, right in there. Looking at the indexes, and I'm not, we could get those exaggerated moves, but I would expect yesterday was a pretty squatty trading session between the bells for the ES and the NASDAQ, basically. The Russell and the Dow had the bigger ranges, and I would expect the Dow to start retesting those, and you have all the markers there. So on the downside for retest, you got the split, the single prints, the point of control, the XS and A, which is also on the ES. So getting below and testing below. Uh, this 66,012 is going to be, that would be your test. Uh, Going back through there and hitting yesterday's low, that should end up being resistance back to the upside, um, especially if you spend more than 35, 40 minutes down below that level. Uh, and again, for the NASDAQ, you got all this overnight inventory that's above the settlement from yesterday, all right in this extremely large value area high zone. And you can see the value area high zone is bigger than the value area range. So value is just basically between 21,241 to 21,182, and then getting back below. We opened the bell yesterday at 21,123 for the Nasdaq, and we opened the bell yesterday at 6,016 yesterday. So I would expect those levels of where we opened yesterday to get rechecked at least once during this session. Uh, Trade safe, trade small. Uh, I don't, we just have to watch the VIX. Again, there's uh, too many parameters, right? No one ever knows what's going to cause the market to go down substantially. It's always something that's unforeseen. Right now, DeepSeek could be what takes it down a little bit lower than people would like, and we'll just have to see if that's what it is. But we're really not going to find out much, I don't think, until we start getting those big tech conference calls tomorrow after the close. So between now and there, it's going to be, just massive speculation up and down, and probably a little bit more of a free for all. I hope this helps. You guys have a great day, and we'll see what Jack's looking at.